Hello and welcome. I'm David Lozada and this is Rappler Talk. Remittances from overseas Filipino workers have kept the Philippine economy afloat in the past decades. Though widely touted as modern-day heroes because of their contribution to the economy, many OFWs unfortunately have or face financial problems. So today we're talking to Vince Rapisura, President and CEO of the Social Enterprise Development Partnerships Inc., or SEDP, to discuss OFW spending habits and emotions and to give us tips on how OFWs, migrant workers, can become financially independent. You can send your questions using the hashtag Balikbayan. So Vince, good afternoon.
Hi,
It's nice,
hi David.
nice to have
Thank
you
you.
here.
Thank you
So,
for inviting me.
yes. So how did SEDP, to begin with, how did SEDP start with the advocacy of teaching financial literacy to OFWs?
Yeah, SEDP's advocacy really is on, or expertise is really on microfinance. So we started doing microfinance in 2004. Microfinance is the provision of financial services for the poor. And in 2008, we were invited to provide financial literacy training, microfinance training abroad by Oxfam Novib in the Netherlands. And the primary target of this training was migrant workers, no, from all over the world migrating to the Netherlands. And what we found out in microfinance here in the Philippines is that a lot of the poor are really financially excluded, and they have low financial literacy level. And when we went abroad and saw the migrants there, whether it be Filipinos, Indonesians, Nigerians, it's also the same. They're financially excluded and they have low financial literacy level. So that's where the opportunity came in, that we said, okay, maybe we should go into financial literacy for overseas Filipino workers because they send a lot of remittance to the Philippines.
So, what are the common trends that you've seen among OFW spending, like saving habits? You've talked to a lot of OFW communities in different countries. So, what are the trends?
Yeah, well, the trend really is what we've seen in our research is that about half of the migrants claim that they save, but when we took a look at the data closer, we found out that only 1 out of 5 save for emergencies adequately. And what's an adequate emergency savings? That's equivalent to 6 months of your income. So that's one of the trends. And we also saw that they prepare budgets, but their budgeting is focused mainly on consumption. So they don't focus on budgeting for investments or for the attainment of their financial goals. So very little really is budgeted for savings and investments.
Aside from, like, based on your studies and surveys with different OFWs, what are the common factors that hinder OFWs from saving?
Yeah, well, when you talk to them, one of the things I think really is they get shocked with the immediate increase of income that they get, and I call this the newfound wealth shock. Okay? And their tendency is to overindulge, like in celebrations, prioritizing wants over needs, and they also feel the pressure of proving something in their communities. I think that's they say it's a Filipino thing, that an OFW, you're expected to be better off when you come back here in the Philippines. They also feel a lot of family pressure to help, no? And they overextend, even beyond their responsibilities. And so say, for example, even their nieces, their uncles or aunties, they also help them. They also fail to plan. So when they go there, they go abroad, they just go there and think that, I will earn a lot, not really think of how they will use the income that they will earn abroad for when they reintegrate back in the Philippines. And lastly, it's really not just for the overseas Filipino workers, but to Filipinos in general. For Filipinos, we use a lot of our emotions when we come up with our financial decisions. So it often leads them to the wrong financial decisions because of these emotions. And these emotions would be fear, anger, guilt, especially shame and envy.
Let's discuss more about they're trying to prove something, because when we talk to OFWs, most of them are like, I initially planned to be here 5 years, then I'm here for 30 years na.
Right.
What causes that kind of what causes that kind of
Right. They immediately change their lifestyle. Okay, so when they go there, initially they say, okay, I only want a tricycle as a business. For example, if you're a domestic worker in Hong Kong, and send my children to school. After 5 years, and they've already attained that, the goal would shift somewhere else. Maybe the tricycle is now a jeepney, and sending the children to school is finished, and now they want to put up a house or something like that. So it's the change in goals is not bad per se, but not planning it at the beginning is what's getting them overstaying abroad.
Of course, when they go abroad, they experience a change of income. They get more money. Should lifestyle change when income changes?
For me, it's better that your lifestyle remains the same as much as you can to keep it simple while your income level is increasing. In that manner, you'll be able to save more, and you could use that savings actually to invest and create passive income for you. And by the time that you've created your investment portfolio and have enough passive income, then you'll be able to afford a better lifestyle without you working really hard.
Another thing you discussed is about taking responsibility for other relatives
Right.
outside the family, the immediate family. And because of this, I think a lot of OFWs resort to borrowing money. Some of them even end up in trouble because of they deal with loan sharks and other illegal lending agencies. So how can this be avoided? I mean, is borrowing okay for
Yeah.
OFWs?
Okay, I have 5 cardinal rules in borrowing. So the first one is if you borrow money, you have to make sure that you have to use it for productive purposes. So meaning you have to use the money in something that creates income. Okay, so the second rule is the income generated in that productive purpose should be greater than the interest that you're going to pay. Okay, I think that's a bit of a common sense, really. And then number 3 is especially if you're earning regular salary, no, you have limited salary every month. You should limit the installment payment of your salary to 20% of your salary or your income. And then also, when you are buying wants or things that you can postpone or these are just luxuries to you, don't use loans. You have to save for it, or better yet, create an investment portfolio that provides you with passive income so that you can finance those wants. And the fifth one is you should borrow from formal financial sources so that you can take advantage of lower interest rates. You can establish your credit history, and you don't get to pay high interest rates from the informal financial sector.
Just to get the nuances, what's the difference between passive and active income?
Yeah. I've been talking about passive income. No? Passive income really is when you generate income, but you actually don't work for it. And examples of these ones are rent, dividend, capital gains, pension is also a passive income, royalty is also a passive income, while active income is income that you generate from labor or work. So you have to invest your time and energy to create passive income.
So for OFWs, what's the best way to earn passive income? In your experience, like talking to different OFWs?
It's really difficult to come up with a general statement for all OFWs, because what I always say is that your investment portfolio should match your financial goals. And of course, overseas Filipino workers have different financial goals. But what I normally advise is, as a first step, they have to practice savings discipline first. And then after saving a sizable amount, they could invest that into investment vehicles. And for me, you can explore, say, investing or putting up a time deposit with rural banks. They provide higher interest rate than the commercial banks. If you limit your time deposit to 500,000 pesos only, then that's protected by the PDIC. And if you place it for 5 years plus 1 day, that's tax-free for you. A lot of the migrants that I worked with, actually, I also encourage them to create apartments or commercial spaces in their hometowns, no? And in that way,
So
they
real
generate,
estate, no?
Yes. So in that way, they generate rental income.
So we're talking about saving. I think you have a model on like tips on how OFWs can become financially independent. You discussed before, when we were talking before, you were talking about the life stage, financial life stages. So can you talk more about that?
Yes, right. So there are 5 financial life stages.
So these are goals. Like by this age, this is what I should have.
Yeah,
right?
yeah, yeah. Right. So by the first stage is the startup stage. It starts. My suggested age here is about 21 to 22 years old. By this time, you should already start building your emergency savings, and then you should also start buying your medical insurance, and you should also start planning financially. Okay. The second stage is the financial independence stage, which is my suggested age here is about 23 to 25 years old. And by this age, you should have already completed your emergency savings, which is equivalent to 6 months of your salary. And you should also already purchase term insurance for this life stage. Then the financial growth stage, which is the third stage, the suggested age here is about 26 to 45 years old. And I call this the most productive years, no, of the financial life stages. But unfortunately, to a lot of people, if they didn't plan early enough, this is also where expenses start to increase because they start a family, they send their children to school. And this is also where the temptation sets in, where lifestyle change rapidly increases while income
increases.
does not follow that fast. No? So those are the things that you have to watch out for. And the fourth life stage would be the financial stabilization, which is my suggested age here is 46 to 60 years old. And then the last one would be the retirement phase, which is greater than 60 years old.
So for OFWs that you talk to, when they attend trainings and the program, most of them, parang what's the mean or the median age for them to start saving?
We weren't
What,
really
like the trends in among OFWs?
among OFWs, the trends when they save.
Yeah.
Well, a lot of them really don't start saving because when they go there, the first intention is to fulfill the needs of their families back home. So it takes a while for them before they start saving. I think this is about 2 to 3 years upon migration that they start saving.
Okay. You've been training a lot of OFWs. You've trained a lot of OFWs now. Can you give us like success stories of Filipino migrants who rose out of financial burdens?
Right, yeah. So we have Marieta Gonzalez, who's from Rome, Italy. She was heavily buried in debt. And because of our trainings, she was able to say no to the requests of her family members, especially those that are not her responsibilities, her immediate responsibilities. And with that, she was able to pay off her loans in about 2 years, I think. And this is about, she finished paying off about 60,000 euros, if I'm not mistaken. And then...
coming from that, saying no to your family is not necessarily bad.
Yes, of course. No? Sometimes saying no is an even more meaningful way of saying that you love them, actually. Because in saying no, they will learn how to stand on their own and they will grow. And for me, love is when you make the other person grow. So for me, that's a more loving act.
All right. Okay. Any more stories, success stories?
Yeah, one of the things that we're really proud of in SEDP is that we're able to change mindsets when we provide trainings. So, for example, we have Emerjon Regala, who's also from Italy in Turin. He said that he wants to get out of his current work there. Being a portrero, I think that's like a building administrator. And so I told him, there's actually open universities available. And if you really want to change your life, you have to make the move.
Yeah.
And so he enrolled himself into a course. And right now he's on his 4th year. And hopefully by next year, he will finish his bachelor's degree and will be able to migrate to a better paying job in Italy. There's another one here in Muntinlupa. She's a domestic worker. Her name is Donna. And Donna is uh, what she intends to do is to save up. When I asked her what her dream was, she wants to save up and become a domestic worker in Hong Kong. And so when I heard this, my heart sank because you're already a domestic worker here, and your dream is to become a domestic worker in Hong Kong. So I took it upon me as a challenge to change that mindset. And after the training, I was able to show to her that if she could save this much, she could actually go to TESDA and get a training. Because I asked her what she really likes to do. She said she likes cooking and she likes fixing and her hair and hairdressing. So I said, why don't you learn from TESDA? Go into culinary arts in TESDA, or learn hairdressing in TESDA. And the money that you use, that you plan to use for placement to become a domestic worker in Hong Kong, use that as capital to establish a business back home. And she was so inspired by that, and she said she never thought that it's also a possibility.
We have questions from social media. One question is, saan po kaya maganda mag-invest ngayon ang mga OFWs?
Oo. Well, that's a common question that I always get asked, no? And my standard answer really is, it's very difficult to propose an investment portfolio to anyone without knowing their financial goals. Because as I said earlier, your investment portfolio should match your financial goals. So, but let's say
Like a standard financial goal. If you
right,
have that.
a standard financial goal, a common financial goal for OFWs is for retirement, right? So this is more on a long-term perspective, and you want it to be secure when it's time to retire. So for me, time deposit in rural banks that gives high interest rate would be good. They could also invest in rental properties. They could also explore investing in mutual funds or bonds that could be placed in the long term to take advantage of higher yields.
Okay. Another question from social media, how much daw dapat ang emergency savings?
Yeah, as I said a while ago, emergency savings should be equivalent to 6 months of your salary or 9 months of your expenses.
So, given all that, what's the first step to financial independence for OFWs?
Right. Well, the first step really is you have to be sure of what you want. You have to establish your financial goals, and that should be put into writing in your financial plan. And when you do that, you have to manage your lifestyle. No? You have to manage your lifestyle change. And normally a tip that I say here is that income from the Philippines should finance the needs. No? And income from abroad should finance the financial goals. So in that manner, if the income from the Philippines is used to finance the lifestyle here in the Philippines, then they would not really increase their lifestyle that much. No? And the third tip that I would give is to save and invest as much as you can. No? So a lot of people would ask me, how much should I invest or save and invest? And I say, as much as you can. But to give a simple guideline, I followed the 5, 15, 20, 60 budgeting rule, which is 5% of your income should go to premium payments for insurance protection, 15% for savings, 20% for investments, and 60% for expenses.
So, this is with tax, di ba?
Yes.
You compute with your net income. Okay. What other efforts or projects is your organization doing? I believe SEDP also goes around the Philippines training urban poor communities.
Yeah. Yes, we go around the Philippines to conduct several trainings. In fact, I will be in Cebu next week and in Laguna on Thursday to conduct financial literacy trainings there. You can go actually to our website to see our schedules, and of course, we would be happy to have our viewers join us in our trainings. Yes. I've also recently published a book, and the book is already available in major bookstores here in the Philippines. And the book is actually a personal finance guidebook. This is very relevant if you're looking for ways on how to start your financial plan, how to get out of debt, what insurance product is right for you, how to invest, how to avoid investment scams.
Okay. In the Philippines, like in the communities that you go to, are there also trends that you see for like workers who want to save? What are the common problems, or what's hindering them from saving?
Right. If you compare the OFWs with the local with the Filipinos, given their economic strata, like I would say the laborers and the
Yes.
micro enterprises, for example, the major difficulty really is the lack of income. They say, and I get asked sometimes, the income that we earn is already exorbitantly low. How could you
Yes.
say that I
That's
should
a
still
common statement.
yeah, I should still save and I should still invest when it's barely enough for me to stay alive. And my answer there always is, well, the challenge really is to increase your income, and that's the only way on how to address this.
All right, so we've been talking to Vince Rapisura of SEDP about spending habits and financial literacy tips for OFWs. Follow our stories on the Philippine diaspora in Rappler's Balikbayan. And thank you for joining us today, Vince.
Yeah, you're welcome.
I hope to we can collaborate, or you can give us more stories about OFWs. Those are
Yeah.
really inspiring.
I'd be more than glad to
Yes,
supply
so-
you with those.
Yes, so we can continue our discussion using the hashtag Balikbayan. This is David Lozada. Thank you for joining us.